Mentorship lecture 14. Today was a lengthy one. Whenever bro says it's gonna be like a 1 hour, he's gonna be done at 11. He's gonna be done 4 hours later. We all know. So overall, kind of notes on this lecture. I had a bunch of order flow notes, which I thought were pretty significant. I'm not gonna go over any of the notes, and honestly, I don't even know. I always do this. I always start like doing like a series on YouTube, and then I'll just stop. And I'll start one again, and I'll kind of just stop. Is that just a lack of discipline, or is that just like me just? I feel like it's lack of discipline, or me just um, kind of switching up my mood. Kind of switching up my mood. I don't know. It's not that big of a deal. But anyways, notes. I didn't have. There wasn't too many psychology notes during this. More just mindset and expectations. Um, Overall, he went over the opening range gap. The first fair value gap in that opening range is going to be largely influential throughout the day. If we are trending, we are likely not going to refer back to that fair value gap. But if we are in a consolidation profile, or if we're kind of just meandering around, or maybe we have more consolidation, we're going to refer to that fair value gap quite some time. It's going to be influential. There's going to be trades to take off of that. So yeah, I know there's a lot on my charts per usual. I don't like to delete my annotations. I kind of just need to get rid of that habit. So, um, yeah, first off, I kind of just do want to go over this price action in Asia first, where the day starts. So right here, we have this new day opening gap. We come back down, we take a minor sell side, then we come back up. And what do? We establish a dealing range here. We establish a dealing range, and then we get, what do we get here? We get a shallow rate on buy stops. We know we're in Asia, so I don't really try to trade Asia, but I'm just here to kind of just look and study what it does, because in order for me to be able to get to that point to where if I would want to trade Asia, I don't think I'd ever will want to trade Asia, but it's something to just study what price action does to better understand what the daily range is going to do. So here we have a shallow buy stop on liquidity, and we know that's okay probably in Asia, because we're probably going to defer any clear manipulations. One, because there isn't too much liquidity that's injected in the market at these times, and two, so so New York can have that reversal or that manipulation. So here we have this inversion level that gets respected after taking buy side. We have these lows, and after like looking at Asia and kind of, I I would say that the new day opening gap is just a nice little bread and butter, um, kind of just magnet after like the first initial doing range is established. So what I've noticed is this first hour is usually this initial doing range being established. This next hour, kind of more manipulation, and then 8 to 9 we then have distribution, and that's this perfect example here. Dealing range, manipulation, and then distribution. And then what do we have? This new day opening gap. You have a fair value gap that's created into it. We get displacement, and then we kind of just taper off. And then where do we trade to? A daily fair value gap, perfectly traded to. Daily SIBI high, or daily BISI. It's on the daily chart. There's a daily fair value. It's a daily SIBI. It's a daily SIBI. I'll just pull it up just for sake, but then I'll have to remove my drawings. So here we have, it's this high right here. That's the high that we perfectly priced to, and as we see today, um, as forecasted, as well, I don't want to say forecasted because that sounds like I ain't trying to be like that, but I'm looking for this BISI right here. I was talking about that in the last video. I want to see this be the draw, and after this big down close candle, I want to see this be an order block. I want to see us respect this, and then I want to see us trade into this. But if we are in an overall buy program here, and we are still looking for this sell side imbalance as discussed in the lectures in the mentorship. But I would like to see this imbalance traded to first, because that seems more probable. After having this rejecting that high right there, it's more likely that we are to trade to here. And honestly, this could low key be a breakaway gap, in my opinion. But I want to see what we do if we just keep getting large candles down lower, which honestly I think is pretty unlikely, but who knows. I think we're gonna maybe consolidate here within this dealing range high to low until the election, and then the election we might have manipulation, but I don't want to forecast that. So we come up. Oh, sorry, we're we're in Asia, and I'm trying to go over I'm looking at Asia here, and I'm trying to go over the, or sorry, we're in London. I'm trying to go over the New York reversal. So as we see, okay, where am I? So as we see here, we have that 150 macro. And here, if we do the first 30 minutes, just the bodies, standard deviation, if you take the opening range from 12 to 12:30, if you take the bodies, you can use that as a projection. And look at that, negative 2.5 is pretty much perfect. And that also aligns with this 75% of this daily volume balance, because that's what this is shaded here. So you have 0 constant encroachment, or 0, 2.5 constant encroachment. So that's what those levels are. And we trade down into this fair value gap. It's that first fair value gap made within the first 30 minutes, but it's just outside of it. ICT was kind of talking about it, but like in some of his explanations, he kind of is. You kind of have to do some more like inferring for yourself, which is I like, because it makes you think. But also he doesn't give most things on a silver platter to you. He never explained it like 100% perfect, but basically outside of this range, we're usually looking for a first fair value gap within that, but I'm not trying to teach that. Then we have this fair value gap that happens at 12:31, just outside that. We still use that, and that's going to be influential. Then we have this breaker that we trade into, 150 macro and 350 macro. Notice how these are offering entries, and also 250 macro does provide something, does provide some substance. Then we come up into that high right there. We take that, we buy side taking, shift to market structure, imbalance right there, trade into this breaker. Then we come back up, new day opening gap, boom, slam down into that imbalance right there. And then we kind of trade up, and then we taper up into 7 a.m. So 7 a.m. opens right here. Then we have a news driver. We come back down, and we take this low here. And this profile looks looks pretty similar to that one profile that we had during the mentorship. I'm not gonna bring it up, but you know, if you've been following along with the mentorship, it looks like that one we had that 8:30 news, and then we waited for the manipulation at 9:30 a.m. It's pretty much this exact profile, but a little bit different because not every day is gonna be completely the same. So we have a news wick right here. I want to see this news low get traded to. I already went over the trades that I took, and yeah, it was quite a day. We have constant encroachment of this wick right there. Here we come up, we manipulate into new day opening gap. We put a perfect high at the new day opening gap. That's very nice to see. And what we have here, we kind of break down, and then we come back up. We take this high here, and then we displace lower. Here's that. There's kind of a lot of things on my chart. I apologize. We have inversion for value gap that gets respected right there, and then we seek lower prices. This is that daily volume balance. These levels are going to be influential. We come up, we color outside of that new day opening gap right here. This is what that box is, into that level right there. Then we leave smooth highs. We come down. We sweep this low into a new day opening gap right there. We come back up into constant encroachment, that daily volume imbalance, failing to trade to the current new day opening gap, which kind of is a key signature right there. We fail to even trade to that, and then we displace lower. We have a balance price range right there. Look at the delivery right there. This is now an order block. We can trust that. We trade within it, and we have a rejection block right there. And then we trade lower, trade lower, trade lower. We put in a low, not at a nice level. We have this new week opening gap that we generate a low above. Lunch macro runs on buy stops right here. AM session buy stops rest there. We then create a balanced price range. We then have displacement, and then we then end up respecting that, drawing into that current new week opening gap. This also is constant encroachment of that SIBI. So you know how we had the SIBI high right here. This is constant encroachment, and this other white line is the low of that. So it's a pretty big imbalance. We trade in a constant encroachment. Notice how that also is new week opening gap high. Then we trade in this new day opening gap, buy side, buy side, buy side, buy side taken. We're failing to displace higher. Then what do? We end up displacing lower. What time is this happening? 3:15 end of day macro right here. We trade up into this SIBI right there. I want to give a shout out to Charmaine Trades. I was watching his video. Sorry if I butchered your name, but he went over a good explanation on this macro right here. But I feel like I'm just gonna go into lower time frame, just kind of see with the exact level that we respected. But yeah, he used constant code to that wick to have an entry. That was a very solid entry. We're inducing into that wick right there, and then we end up turning off lower, and then we seek sell side and then sell side. Then we have 345. We have this end of day macro market on close. We then end up drawing into this new week opening gap, and then we come back lower, sell side, sell side, sell side. This ICT went over once when we take 1, 2, 3. When we take 3 times the sell side, we're keying up for a likely short-term retracement or a full-out reversal. If we look at ES, I'm not going to pull it up here because I don't have a tab open with the chart, but ES drew right into the current new week opening gap perfectly right as soon as we trade into that, which was the draw on liquidity for ES, which is why this is just a run to generate liquidity. We then have that expansion move after that. And right now, it looks like we're trading higher off of that. So, very nice to see. Let's go ahead and let's just drop down to these lower time frames. Just get a little bit more detail and see the exact reference points that the algorithm's keying off of. So here we have 830. We have this news wick. We have a wick lower. And we're coming back down. The algorithm's keying off of this daily volume balance high. So we're trading within that. We then come back down lower. Constant code to that wick. I didn't annotate this before. Look at that. That's beautiful. That is beautiful. This is why I like using these lower time frame charts, because just seeing this happen on these lower time frame charts is just absolutely wonderful. So constant code to that wick. Then we're in a buy program. Displacement. Or not really displacement, but just offering higher prices. 9:30 opens. What do we get at 9:30 open? Boom, manipulation. What is this? We form a balanced price range right here. So I'm just overlapping these imbalances. And honestly, this isn't even an imbalance, so I don't know why I have that there. So it'd be more like this is the balanced price range. You don't want to see constant code doing that. Disrespected. We're trading up into that. Respected. Then this is kind of just consolidation. We're waiting for news, which is what I didn't do today. If you saw my little mishap today, not really mishap, but we'll be back for sure. And then we have news right here. We leave equal highs at news, so we don't have a strong manipulation move at news. I'm gonna get rid of this because it's kind of a lot of stuff on my chart. So notice here we also have this imbalance that gets it doesn't get reclaimed. I thought I got reclaimed right there. We have a little balanced price range that gets traded into right there. Also this inefficiency. We trade into this volume imbalance again. Notice how influential that level is. So this will always be influential if we're trading within it. Then what do we have? Change state delivery. We have a balanced price range with the wicks here. We have this volume balance right there. And then we end up seeking buy side liquidity. We leave a breakaway gap. And then as soon as we trade into this is when we have our SMT. This is when we're trading into these highs, and we instantly just sell off. That inversion level gets used. That first for value gap created within the opening range is influential. And if I just bring it up, we are in a premium because of the opening range. We're above true day open. Smart money is accumulating short positions above true day open with all these factors. Then we see displacement. Then what do we have? We have consolidation. Consolidation is not going to lead to a reversal. What are we doing? We're just repricing this inefficiency right here. What do we then have here? We break down, we respect this inefficiency, then we get displacement. Boom, new day opening gap with that inefficiency right there. That's a nice little entry model. Nice 30 points right there. Beautiful. This is why these lower time frames are just so nice. Little points there. We had a liquidity void on the 5-second chart. We leave smooth highs. We create low resistance. We come back down. We trade into a new day opening gap. We then don't really have anything here. We then have a market structure shift confirmed there. We have this imbalance that gets respected. We have a 5-second imbalance that's going to get respected there. And we overall are trading within this 15-second breaker. So look at the bodies respecting this breaker. These bodies colored a little bit outside of it. And we're also keying off that daily SIBI high right there. And what do? We trade to these equal highs. Also, what time is this occurring? This is occurring within a macro. We then reach buy side, and then we instantaneously break down. We then have this imbalance that doesn't get traded up to constant encroachment. That is telling. There is that rejection block that was on the 1 minute, and then we end up displacing lower, inefficient or institutional overflow entry drill, SIBI. Nothing much here, and then we come up. We take a low. What time is this? This is the lunch macro. When do we reverse? This is beautiful. This is gorgeous, actually. When do we end up putting a reversal? During the lunch macro, 11:50 to 12:10. We then have sell side taken, displacement higher, breaker gets respected right there, along with a 1 minute imbalance, I believe is what I have annotated here. This gets respected, trade higher, stop on right here, and then we just end up taking the AM session buy side liquidity there. Then after that happens, we kind of end up consolidating here, and then we have this volume imbalance against left as a breakaway. We then have a balanced price range right there. Institutional order flow entry. That's a mouthful. Institutional order flow entry drill because we have a balanced price range. So we trade lower, then we trade into that new day opening gap as discussed. And then here is that end of day macro here. Buy side taken. We're not really getting displacement higher. Overall, ES still needs to trade into its new week opening gap. That's drawn liquidity. Then we trade up into here. We trade up into where? A volume imbalance right there. Beautiful, beautiful. And then what do we have here? Displacement. This actually gets left as a breakaway. That's what we want to see. Then what is this? This is inducement. This is inducement. If you guys look at who Afiz is on YouTube, Afiz has a good lecture on inducement. I'm not going to post it in the comment section, but if you look at who Afiz is on YouTube, he's a very nice lecture on inducement. That's what we're doing here. And then we're trading up into a balanced price range and also into this SIBI right here. So notice how that constant encroachment on that 1 minute chart is a lower time frame inefficiency with a lower time frame order block right there. So that's what that is. Those are those actual levels. And then here we have 345 macro opens up. We take sell side. We then have this on the 5 second. We have a 5 second breaker. We trade up into that new week opening gap. Then we come back down because ES needs to trade into its new week opening gap. Sell side, sell side, sell side, sell side. Market structure shifts. Old high acting as true support here because we have an imbalance right there. And then we trade up higher. And then we see this. And now we're seeing higher prices here. So again, last little run here. This is like a little marathon we got going on. 5 second chart. Okay, we're good. 5 second chart. I'm not going to go over it too much. Okay, that was constant encroachment. SIBI right there. Look at that news wick. There's no real manipulation here during news. So we have this institutional overflow entry drill. But down still balanced price range on the 5 second, maybe something on the 1 second. We traded this inefficiency right there. Institutional overflow entry drill, volume balance. Beautiful. Volume balances getting respected on the 5 second or 15 second is very pleasing to see. They come back up into that inversion level. We have this sell side imbalance right there. We then balance price range with those wicks. Sell side imbalance right there. There's that accumulation. There's that liquidity void, a real liquidity void because there's no trading. But notice how we have this wick right here that has some delivery there. Ooh, I messed that up. Straight up. We leave a breakaway gap here. This imbalance gets respected. Boom. This is heavy price action right there. Then boom. Notice how heavy this is. Like these candles are pretty big in proportion to the other ones. This whole 100 points there. Sell side imbalance. Here we have that lunch macro. Breaker getting respected. And I just want to go over this. See if we can add a little bit more flavor to this. Not flavor, that sounds. So we have that's the little sell side imbalance right there. As you can see, we trade up into. We have this volume balance. The high doesn't trade into it. So we don't even trade into that. And then we end up breaking lower. Here's this inversion level, break or mitigation level. Yeah, that's a mitigation. I have it annotated as a breaker. My bad. My bad. All right, and that was the day that we had today. So overall, what do we have? We had a 9:30 reversal. 8:30 put in news. 8:30 really failed to meaningfully manipulate. 9:30 then reverse price. 10 a.m. we come up, and then we kind of have a reversal there. So and we end up just trading lower. Daily power 3. So anyways, I appreciate you guys, and I'll see you all in the next one. Have a good one.